Hi, everyone, and welcome to another 20-minute power play. I'm always super excited to bring you these sessions. First Wednesday of every month. My name's Sam. I'm the head analyst at CCI. The aim of these sessions is to give you a snapshot into what we are sharing with our clients on a daily basis in our premium groups. And again, it is just a snapshot. It's just a highlight. I can only cram so much into 20 minutes in these sessions. And I could go on for literally hours. And I do 2 videos a week for our mastermind. They're our advanced clients. And I talk a lot about macro and traditional finance and how it affects crypto. So that's my angle. That's where I really want to focus on. So in this session here, I'm going to just go through a lot of what I'm seeing in the charts and also in the macro in terms of the risks that we're seeing as well in this market and pretty much why we've been in a bit of a downtrend. I'm going to look at sentiment as well. All right, I won't bore you anymore. I'm going to crack straight in because we have so much to cover. I want to fit in as much as possible. Let's just quickly have a look at the fear and greed index at sentiment, because I always like to start here just as a bit of a snapshot of what's going on in terms of the emotion in the market, because it is so important. It's becoming less important for Bitcoin, I will add there. Altcoins still are incredibly pegged to what's going on in the emotion of the speculators in the market. Bitcoin now is more of an institutional macro asset. So yes, we do have phases where people do FOMO into Bitcoin and buy it on a whim and want to speculate that it's going to, double or triple. But right now, that is far more large net worth investors and institutions, and not so much that individual investor. They are concentrated more in altcoins. So the emotions of the market are more focused there. We tend to find those investors in Bitcoin are less swayed by day-to-day emotions. They're here for the long haul. And then we will see that in the data a bit later, how Bitcoin is being hoovered off the market, put into cold storage. So we call them diamond hands. They are rarely selling. And the great thing about on-chain data is we can see that they're rarely selling, because that Bitcoin's moving to wallets that rarely transact. So that is a super important thing to know. And so altcoins are super volatile and they are still linked heavily to Bitcoin. So fear and greed index is great over a longer period of time. And I think it is still hyper useful to recognize key pivot points in Bitcoin. And right here, we've had fear and extreme fear for quite a long time now. And what I look for is heavy concentrations of fear and greed. And if we go out to the max, we see where we are here. We've been concentrated in the lower band of extreme fear. And you probably remember the last few episodes I've done each month. It's been stuck there. And we have numerous pumps up, but they're sold into almost like dead cat bounces. As soon as we have a bit of relief, people get a bit excited again, and then they're whacked on the head and we go a bit lower. So that's what we're seeing. Now, the really severe bottoms in this market are when we see that concentration of fear and greed. Now, 2020, if you remember the COVID crash in traditional markets and also crypto, where we went down to about $3,000 I believe, in Bitcoin, you can see that concentration is almost in the single digits. That's a really important metric. We also had a bottom last year at around 30,000. You can see that concentration there. And now we're back in this range here again. When we truly find bottoms in crypto before we move higher or release ourselves from a bear trend, it has to be in those times where you're almost seeing, we call them permabulls, or people that have been super bullish on crypto and Bitcoin. They start to flip to the other side and we see depression, fear, panic. You always think you know a bottom, but you don't know a bottom until you experience that emotional pull. And it's something we want to train our investors to think of and get into the mindset of longer term investing, because this shorter term stuff gets in your head and it's a lot of nonsense. So you just have to pivot with that, but recognize it for what it is. But these are key pivot points in Bitcoin. When we start to see these heavy concentrations, it can flag a reversal. And I'm a very contrarian. I love to observe this as a contrarian indicator. When we're at the extreme on one end, we likely see a swing back, whether it's tomorrow, week after, month after that. We will see it eventually. And that's just from my experience in the market. And I want to use Peter Brandt's tweet. I thought it was absolutely excellent. Now, Peter Brandt is a very respected trader on Twitter who dabbles in crypto and also traditional finance. And I just love how he comes out sometimes and just says it like it is. And he was saying when we were moving up to, let's say 60,000, we reached another high, 69,000, so all-time highs last year. If you were on Twitter or in socials, you'd start to see laser eyes popping up. So people in their profile images would put laser eyes in their eyes after Michael Saylor did it. And then it snowballed. It seemed like everyone was getting on the Bitcoin train. We're going to 100,000, we're going to 200,000, we're going to see the high, it's coming. And that's the sentiment. Everyone's, too bullish at the top and 2 bearish at the bottom. And that's what you'll see in those extreme shifts. And so he used that as a contrarian indicator. So laser eyes appeared up here when we were going for the highs. And then laser eyes appeared again when we were going for that second high, 69,000. Now, where we are now, you look on Twitter, you look on socials, a lot of those laser eyes have disappeared or they're far, far quieter. And it's absolutely something I've seen. I have never seen Twitter this bearish, and I'm including, 2020 and even going back to maybe 2008 when Bitcoin, came of age. You could see, especially in 2008, traditional finance really just took it to the bulls. They really stuck it in hard. And what we're seeing now is traditional finance is actually jumping on crypto and Bitcoin, doing a victory lap, saying, oh, it's all going to zero, it's dead. Lo and behold, the sentiment in stocks has never been this low either. So they're looking for an easy target, and we're seeing traditional finance turn on Bitcoin. It's pretty crazy, to be honest. And right now, the people that are left in Bitcoin and crypto have seen this all before. They've seen this play out. They're holding strong, and it's all just this sentiment shift. And it gets very, very tense when you're at the bottom. So everyone gets a little bit on edge and emotional. And those are the times you want to recognize that are key pivot points. They're times that you really want to almost scale into the market. So hopefully that paints a really good picture. But he just says here, when bulls wear laser eyes, time to sell. When bulls become bears, time to buy. And I'm seeing bulls become bears currently, which is very interesting. All right, let's crack into the charts because I think it's super illuminating where we're at. So right now, I'm just going to hit you between the eyes. Bitcoin is very boring. Nothing has changed. And until it does, we are still in a severe bear trend. You can see here since the $69,000 top, we've been like a bouncing ball that consistently gets weaker with every bounce. We've had a few wedges here, so some bullish setups that we've broken out of, run into heavy resistance and been hit back down in almost dead cat bounces each time. We go lower, had another wedge here, into resistance, down lower again. We're building into what you could form as a bearish wedge. I'm not going to get into patterns, but just you look at this, it's starting to build up again. We're running into resistance. Are we going to get hit down again? It's probable. So that's what I'm looking at here. The only way we can get excited with Bitcoin here is if we break this bear trend, and that would be getting above, I'd say 42,000. Break through this diagonal trend here, get above 42,000, get above some key moving averages, also some volume support. And just by saying a lot of this stuff, it's going to be a tall order, but it is absolutely possible if we get that buy volume return to the market after that slow end of year, which we saw. But it's very possible. When Bitcoin wants to move, it moves quick. So you don't want to be caught on either side of Bitcoin's volatility. You want to have yourself positioned, well in advance of any of this moving. So this is what I'm saying. Again, not getting excited at all unless we break this trend. And until otherwise, we're going down to 29,000, 28,000. Now, the issue with that as well on the flip side is we've just had I would say 60+% drawdown. So 52% drawdown at its lowest. Is it probable that we're going to continue dropping another 10, 20%? I think the risk is more so on the bears at the moment that, they've exhausted themselves trying to sell this market to where it is. And now we're running into some heavy buyers that have their buyers stacked on exchanges ready to go. And there's a lot of institutions and funds sitting on the sidelines that we're seeing a $69,000 Bitcoin thinking this is pretty overheated and a bit expensive here. We'll buy when it retraces. Where is it now? It's a 50% haircut from where it was. So very, very enticing. Now, the positive for the bulls here, just at a high level, is the RSI, so the relative strength index. We're seeing Bitcoin actually break the downtrend. So what I want to see here is this indicator moving concert with price. And right now, price is beginning to look like it's going to maybe move in line with the new bullish momentum, but we haven't seen it yet. This is really positive that we've seen the break. We'll probably have a retest of the line here, which will be good. But otherwise, this is a good solid start for a reversal. But again, Bitcoin needs to move with it. We've just had the daily open here, just opened a little bit negative, but that doesn't mean anything. We're at 24 hours until this red candle closes to move higher. So just something I'm seeing here, potentially a bullish setup. I'll have to pay attention. Now, I wanted to move to the weekly to take a lot of the noise out of the market. Even at the daily, it can be a little bit a bit choppy, so it can move left to right and your emotions can be pulled as well if you don't have the right training to absorb that. The weekly is fantastic at that, and I just want to show you a few things. Look where we are right now. So this is a weekly, so every candle on this chart, so green and red, represents a whole week of price action. Now, if we look here, it looks like we're just ranging in between this area, which it's very clear. You can see here, people were getting ultra bearish at 30,000. People again getting ultra bearish at around 33,000. But if you look at this price action, we're actually getting higher with each bounce. So yes, this retracement was huge, but we're still within this large range of resistance and support. Now, we had this drawn as almost like Bitcoin was moving into a ascending triangle. It's a bullish formation. I reckon we'll get rid of that because that hypothesis didn't play out. Now we're just ranging and waiting for more data, basically. But what I really like about what's happening here, we've had a bounce off the 100 moving average on the weekly, which is a serious point of resistance. And it's confluent with this horizontal resistance that held up the $30,000 area. You can see this beautiful bounce that we've just had off it. That to me gives me a lot of confidence currently, but that doesn't mean we can't just run up here to 41,000, 42,000 as we're showing you on the daily in like a dead cat bounce, and then we have a full reversal for the final capitulation or even lower. But really it depends on the macro situation, which I'll get to in a sec. But so far, so good. Again, really easy to just step back on the weekly and just take a lot of that noise out. Also, I'm seeing on that RSI, so the momentum indicator, we're seeing a hidden bullish divergence. So price has actually made a higher low. So you see the low here, and then this low is higher over here, while the momentum on the RSI is actually dropping. This is called a hidden bullish divergence. Gives the market an incredible amount of fuel to go higher if bulls really want to step on the gas. And if we see $65,000 level reached again, and we see the RSI trending into the power zone, so above 70, then I'd be very, very confident that we see 100,000. But that is far down the line, potentially later in this year, as long as the macro holds up. But again, the weekly is very telling for me and can give you a far clearer picture. All right, let's get into some news and some on-chain data just to form around the thesis that I've just spoken about. Now, sovereign adoption is just accelerating. And this year, I think we see Fidelity, a massive fund, has released this year that they believe at least two the sovereign nations will adopt Bitcoin as legal tender this year following El Salvador. So that is hyper bullish news that we just have to pay attention to. And of course, there'll be some curveballs that come out of nowhere, and this was it. So and this year's only just started. So this is a bill introduced by the Senate in the state of Arizona in the US to make Bitcoin legal tender. Now, a lot of this has been pointed out to me as well through sources on Twitter that a lot of this is just it will just be for, it won't be a serious legal tender bid. It needs to be a federal level, but this is very much how Arizona is looking to position themselves against Florida, Texas, Wyoming, who are all positioning to be Bitcoin centers of innovation, and Arizona is trying to get on top of it. So it is a little bit of window dressing, and the feds can just come on over and hit them over the head if they wanted to, but it shows the intentions of these states to really encourage the economic drive and innovation that Bitcoin can bring. So this is super bullish news, but again, it is a little bit of window dressing. A few lawyers have chimed in saying, is it enforceable if the feds don't want it? And really, that's still to be proven. But I never thought I'd see the day in the last 3 years where we see a US state look to make Bitcoin legal tender. So again, it's very much a watch this space, but I can see Texas doing the same thing soon. So it could create a bit of a snowball effect as entrenchment in US government grows. Okay, I wanted to show you this because this is some key on-chain data. So this is the Bitcoin entity adjusted dormancy flow. So there's only been 4 times in Bitcoin's history that the Bitcoin held by wallets has been this illiquid. So all this Bitcoin on the market of the circulating supply has been going into wallets and it's not moving. And it's at a key point in the on-chain data that it's showing us that generally it has a bounce when it reaches these oversold areas. I found this super, super interesting just because of the signal it gives. When it gets to the bottom range of this green area down here, super oversold, we have seen a bounce in the previous market cycle. So whether we're in a new paradigm and this doesn't matter, I'm not sure, but it is a key metric that we're watching. And it certainly would make sense after such a bearish phase that a lot of the tokens and coins have just been hoovered off the market, put in dormant diamond hand supply, similar to what the information that we've been seeing elsewhere as well. And it's just not moving. People are just holding this. They know where Bitcoin's going in the next 10 years. They're not selling it for whatever reason. And eventually the speculators will get tired of selling. We're also seeing data that because of low volumes and thin order books, that a lot of this movement in the market is actually from derivatives. So it's futures markets, so being sold and bought on exchanges. This is another metric that I wanted to show you just to paint the overall picture of how bullish things are for the mid to long term. So this is Bitcoin supply on exchanges, and apologies if the image is too small, but you can see the price action in the background, and we've had two run-ups to all-time highs, so 60,000 and 69,000. And then we've had two massive 50% corrections. You can see the green line here goes up and goes down. Now, what is the divergence that you're seeing on this chart? So the purple line is actually Bitcoin supply on exchanges versus price. And you can see it is going inverted. So even though we've had those two massive retracements, the Bitcoin supply on exchanges continues to plummet. People are just buying Bitcoin no matter what at regular intervals, and large entities are hoovering supply off the market. So if you're selling a Bitcoin now, you are selling to mega whales or institutions or big funds that see the future, and they're positioning themselves for the next 10, 20, 30 years. All right, so much of what we are looking at now in the bearishness in the market has come from macro instability. So the Federal Reserve flagged a bit earlier in the year that they were looking to raise interest rates in March and potentially start to offload some of the bonds that they've been buying on their books through quantitative easing. So a lot of that is very, very bearish. And I'd just like to point out that Bitcoin has not existed during a time when we've seen an aggressive Fed look to raise those interest rates, and we've never seen Bitcoin in a time of serious inflation in terms of CPI. So a lot of things are really in motion here, and we just don't know how this is going to play out. But again, the Fed is boxed into a corner, and I speak about this a lot with our clients and also in our previous sessions, that they really can't raise interest rates to any meaningful levels because so many of the middle class in America now own stocks. Pension funds are highly levered up in equities. If they decide to raise interest rates too high, it will push the American economy into a severe recession, if not depression, and that is very extreme. But asset holders will get killed. And no sitting US administration would want to see that, especially going into an election year. So that's where I stand. And I've always painted the picture that the Fed, again, is boxing into a corner, and they want to do the path of least resistance. They want to do a delicate balancing act where they look like they want to raise interest rates a little bit, but also continue that QE, providing stimulus to the market and new US dollars to overseas swap lines of participants. So I think that's how they're going to go, and I'm seeing constant communication from the Fed that they were hawkish, and now they're starting to turn a little bit dovish. I think as the practicalities of what they're proposing are coming to the fore, people start to know that they are boxed into a corner and they can't raise interest rates to the meaningful levels that they want to do. And they're coming out today saying they don't want to disrupt markets, but also need to keep inflation under control. So if they're not looking to disrupt markets, then they're not raising interest rates at any meaningful levels. And they're also not going to offload their bonds, to any degree. They're going to have to keep providing liquidity in this market to keep this parabolic bull market in traditional finance, S&P and NASDAQ, continuing to climb higher. And some other tweets as well. I don't think a 50 basis point increase really helps us right now. Again, the communication is now coming out that they're looking to tone back their interest rate rises. They've just given the market a heck of a big scare, which was probably what was needed, and we've had a correction. And now, as the realities of that communication has come out, they haven't even raised an interest rate yet, and the market absolutely tanked on them saying they were looking at it. So yeah, you can imagine the haircut that the equities market would cop if they actually started a lot of these hawkish policies for the market to come back to fundamental valuations of a lot of the stocks, which is at least 50%, and no one will stomach that at all. And this was super, super telling that there's no way they're going to stop the money printers or QE. US Treasury expects to issue $729 billion in net market able debt in January to March of 2022 period, up from November estimate of 4.476 billion. Now, just to put this in context, 729, that is almost double the amount that was injected into the market in the 2008 financial crisis. So they're constantly having to ramp up the liquidity into this market to make sure the show goes on. And this is why a lot of us are super interested in the macroeconomics of Bitcoin and crypto and how it affects basically the entire financial system and why it is continuing to gain popularity, because the system, frankly, is on its last legs. and they're keeping the show rolling by printing more money, which in turn debases the currency, making assets like Bitcoin more valuable. So again, lots to think about. And now we move more into the geopolitical space, because one of the biggest risks I see currently in the market is what's happening in Europe. Now, Russia is clearly looking to make a move on Ukraine. However, we really need to just see how this plays out. But if you look back onto previous conflicts, like the Gulf War, markets never respond well. We see things like oil move up and whatnot. We just don't want to see a continental war in Europe. And whether it turns into a continental war, we just don't know. Could be just localized to Ukraine if it does happen. But what we're seeing now is, because Russia is potentially going to move on Ukraine, they will likely move into contact or conflict with the United States. And we know the United States has the terrific advantage of holding the global reserve currency, and they can print the US dollar as much as they want to fund war machines, again, anything they want. The Russian economy cannot. They can continue to print the Russian ruble, but eventually it becomes worthless because there is no demand for it. So what's happening now? Bitcoin is becoming sort of this geopolitical football. And we saw the Russian president, Putin, come out and say he supports a government proposal to allow regulated Bitcoin and crypto mining. This was a massive backflip from communication we heard even a month ago saying that they were looking to ban Bitcoin. And I just wrote here, remember when you thought Bitcoin and crypto was a scam? Now it's a geopolitical football between superpowers, game theory playing out. And lo and behold, after Russia made this statement, and you can likely assume that Russia wants to have a look at cryptocurrency as a potential backup plan if their primary plan doesn't play out, to avoid US sanctions, because if they want to take on Ukraine or the Baltic states, whatever they plan to do, they will get hit hard economically with sanctions, but they have tried to prepare themselves for this eventuality by stocking up on gold and other assets. They have huge amounts of energy reserves, oil and gas. So they're really holding Europe to a bit of ransom here. And regardless, the United States President Joe Biden came out and said they're preparing to release executive action to regulate Bitcoin as a matter of national security. Now, that line can be a little bit of a negative and a positive. So we're going to have to wait and see what it comes out. But from what I've read, it's really a structured framework, because each state in the United States has different ways of looking at crypto and Bitcoin, and they want to maybe put a united framework for the entire country. But it's interesting that it comes out straight after Putin said this. So we'll see. Will the US crack down very hard on Bitcoin because they fear that the Russians or bad actors in this situation may use it to get outside the consequences of what they're looking to do? So again, find it all very, very fascinating. And I have explained a lot of this. I know we're running short on time, but feel free to pause this here and read this. This is something I posted into our groups for premium clients about where I see the risk that Russia presents, or a conflict between Russia and Ukraine, and what it represents for markets. So just give that a read here about the risks, about how I see it in the short term, and how Bitcoin might actually be quite a tantalizing asset for some of these nations coming out of this situation. So short term, it's just bad for markets, just in general. Traditional markets, crypto will get absolutely nuked, but that will be a short-lived thing as markets digest this information and we see what happens after that. We just don't know in the digital age what a war will look like on any respects. So just have to pay attention. And just some quick pieces of news here, which I found quite good to pass on in terms of where big institutions see Bitcoin, because we're seeing something in price action, but underneath the market, fundamentally, we're seeing something completely different. So Fidelity, they have $11.1 trillion under management, massive investment firm. They say that Bitcoin has the potential to be the primary monetary good. Now, they're saying this after they've built out their platforms, they've got all their investors on Bitcoin and crypto. So none of these institutions come out and say, this positive news if they haven't got a vested interest in it. And likewise, they will come out and poo-poo it if they haven't built a position in it. Now we've seen BlackRock do the same. They were very bearish on crypto and Bitcoin, and now they're building out products, applying for Bitcoin ETFs. Charles Schwab as well is doing the same thing now. They're coming out and being quite positive on it. It's just the way the world works on Wall Street. So very, very interesting news coming out. And it's little wonder that we see on the back of some of these really strong and large institutions moving in this powerful block of money that we see whale balances start to move up, and then new whale balances as well. So these are whale holdings, entities with over 1,000 Bitcoin in their wallets. So these are newly minted whales are coming into the market, and you can see price falling while whale holdings are going up. This is a tremendously bullish sign for the mid to long term. Now, everyone, if you want to learn more about what I've spoken about today, and again, I'm sorry I've run a bit over time here, but I go into detail about what Russia and Ukraine means for crypto and traditional markets. As well, I go more into what the Federal Reserve policy means in terms of a period of tightening, and whether we see QE return. That's all in our premium newsletter, and we release that on the last Thursday of every month. I'll put the link in the description below, and you can sign up and read that. It's about 70 pages long, but we do break it up into segments where we look at the market on chain, and we also do a deep dive into a couple of cryptocurrencies each month. So those fundamental analyses are absolutely worth the price of admission. So I'd absolutely say get on that. We also provide signals as well, buy and sell resistance levels, more educational purposes, but you can use them to help you structure your portfolio as well. So everyone, I want to thank you for your time. And again, sorry for going over, but hopefully I provided you some valuable information and give you a snapshot on what we cover with our clients. So have a wonderful day, and we'll catch up again soon. See you guys. Bye.